mentioned the current state of ethanol earlier in the show. Now we look at dry distillers grains, one of its co-products. On a balcony overlooking Shanghai, we talked with UNL Ag Economics professor Dennis Conley about how China has become a big importer of U.S. DDGs.
Well, China, I think most people understand, is interested as their incomes go up. Their demand for protein is going up. This is true in many countries of the world, and it's happening now in China. We all know their incomes are going up. And so, as they want to produce more protein, more animal protein, they need the feed to go with that. And what we've discovered is that they've become a major importer of distillers grains, dry distillers grains, from the United States in the last couple of years.
Now the projections show one of two things. Either that number goes way up or it levels off. Why are there two differences there?
If we just take the current numbers like 2010, we're talking somewhere in the 350 million, 325, 350 million bushel range. If we project out the trend, though, that we've seen over the last 20 years, that number projects to more than double of that, like say to 750 million bushels. So there's two scenarios. There's sort of the status quo scenario, and then there's the high import or exports from the U.S. scenario.
This would stand to reason that China is a country that produces a lot of corn. They're also a country that needs a lot of DDGs. Why wouldn't they build their own facilities to make it?
Someday they probably will. The story that we hear about China, though, is that yes, they do grow a lot of corn. The problem is they don't have the infrastructure to get it from where they produce it to where they need it for consumption. And it's logistically easier, in many cases even less expensive, to import it from other countries like the United States.
Let's talk about what goes into that, especially from the U.S. side. The appreciation of the dollar right now, it's fairly devalued when we talk about exporting to China. What would happen if the dollar did appreciate?
Yeah, the dollar has been depreciating over a number of years here, which makes imports to China less expensive. Creates an incentive for them to buy corn and distillers grains. But if that reversed, if the dollar began to appreciate in value, then those imports would become more expensive and our exports from the U.S. would be less.
How does U.S. ethanol industry play into this? This is an industry that's obviously changing with the expiration of the blender's credits starting in January of 2012. So how does that play into what we could see in the DDG front?
What's happened in the U.S. ethanol industry is that, historically, 2005-06, it was ethanol that everybody wanted and was using in the blend with motor gasoline supplied. More recently, though, with the adoption of distillers grains and the feed grain livestock economy in the U.S., there's also now demand for that co-product, which is helping support the ethanol industry in the U.S. The unexpected thing was that in the last 3 or 4 years, the exports of dried distillers grains has grown very dramatically, those countries being China, Mexico, and Canada.
If, like we said, there are two possibilities here. It levels off or it goes up when we talk about exports of DDGs to China. If it goes up, what could we see from a price of corn standpoint?
If it goes up, let's say just at the extreme, that those exports double to those countries, China, Mexico, and a number of other countries, but let's say those exports double. I don't think we can produce the corn fast enough to be able to supply enough, and so the price of corn will go much higher.
We talked about two scenarios. Either exports from the U.S. level off or they go up considerably. If they were to go up, what would that do to the price of corn at home?
I think if they go up, say at the extreme, double of what they are today, say in the next 5 years, my guess is that we would not be able to produce corn fast enough in order to offset that increased demand for those distillers grains. The ethanol plants would be producing a lot more distillers grains. They'd be using a lot more corn. Right now I think they use about 40% of the corn that gets produced. Under that scenario, they might be using somewhere around 60% or more of the corn that gets produced. So you can imagine on the supply side what the effects would be on prices of corn in the U.S. We're talking about corn prices now, $6 a bushel. Under that scenario, who knows what it would be. My guess is we could see $8, $9, maybe $10 a bushel.
And we bear in mind that we're just talking about China in that scenario. We're not talking about Mexico or the U.S.'s own needs.
We're talking about primarily China as the the Asian tiger, if you will, that's consuming this. But the other countries, Mexico, Canada, and a few others would also be major players.
We should note that Dennis mentioned $6 corn during the interview. We talked with Dennis in mid-June before the recent rally in corn markets, and one that some fear could ultimately alter corn demand.